Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Monday, May 4th. Firstly to the S&P 500, and here we see a continuation of the trend to the upside for today's trading. This current candle has made a higher high and a higher low. We've also seen the market gap up on the open and create a window, and that's this area of between the two candles here where the market has closed previously. It's gapped up and has failed to fill that gap, and it does suggest that it may be a very important level of support moving forward. It's only quite small but can be quite strong if we do see the sellers trade down there, and there's a possibility of the sellers losing commitment down below that level. For today's trading, and following on from the very strong bullish trading of the previous day, where the market traded through the 2100 level and through the Tenkan-sen in a bullish manner, today we've seen the buyers continue with the trend to the upside with a white body candle. But we've seen a very large reduction in the size of that white body, and the white body tends to represent the amount of net momentum that the buyers, if it's a white body, if it's a black body, the sellers, but the amount of net momentum between the open and the close that the buyers have been able to generate for the day. So for the previous day it was quite large, it was at something of an extreme, it was a very large bodied candle, and for today we've seen a very large reduction. So it suggests that there is a possibility that the buyers are certainly losing some strength in terms of net momentum, the amount of distance that they're able to move the market between the open and the close, and that suggests that there is a possibility for a change of trend. And with candlesticks, the size of the bodies are very important, and this large reduction in the size of the body suggests the possibility of a change of trend, but as always we require confirmation. Now, with that strong support from the window that was opened up down below there is some doubt about whether the sellers are going to be strong enough. Importantly here too is that the buyers have lost control. So whereas with the previous candle the market was able to close at the high, so the buyers showed very strong commitment and closed with control, here we see this large shadow with the market closing around the midpoint level, and it suggests that whilst the buyers failed to close with control, the sellers also failed to close with control, with the market closing around that midpoint level. And we also have the large shadow highlighting the buyers losing commitment up above that 2114 previous level, previous major swing high, the market failing to close up above there in any significant manner, and the market testing above 2119, the level after that, the next major level, certainly failing to test up to the level that was established about a week ago at 2125, and the strong rejection from there, the buyers losing commitment above there, does also suggest a possibility of a change of trend. Now, if we do see any change of trend, we're likely to continue to find strong support below here around the 2100 level, around the Tenkan-sen indicator, roughly about 2102, 2101. Then down to the 2093 level, and then down certainly to the Kijun-sen, which has held as very strong support for the 3 occasions in the past month or so, so very strong support around that area. Now, just looking at the Fibonacci extension technique here with the S&P, and following that bullish activity, as I've mentioned, we saw the buyers continue in the market, trading the market up with a new higher high and higher low. But today we've seen the market testing to the 78.6% level and being rejected from there, with the buyers losing control, losing commitment throughout the trading day, and suggesting a possibility of a change of trend. Just looking at our bands here with the S&P 500, and here we see the market trading outside of the upper band once again. Previously we were trading up above the upper band, the middle band holding as support on a retracement, then failing to hold as support, but the bottom of the band for the past 2 candles has held as strong support. So anywhere within the bands, or certainly at the extremes or at the middle, tends to be an area of strong support or resistance. Today we've seen another breakout to the upside, but on a very weak candle in terms of the buyers, and doesn't give a lot of confidence in the market continuing to trend up. Now, that doesn't mean that we won't necessarily see the trend continue, but with the buyers losing commitment, certainly does suggest a possibility of a change of trend. If we do see the market change trend, then looking to the middle bands once again to hold a support at 2100, and then the bottom band at 2088. Next, taking a look at some of the asset classes tradable through the ETFs, and we're using the RRG charts initially to look at this, and we're looking at the relative performance of these ETFs against the SPY ETF, which represents the equities market, and looking for those that are outperforming or underperforming. And here we see DBC is the code here, the commodities index, and it's one that was a strong ETF versus the SPY, versus the equities market in the US. And it's moved from that upper right hand quadrant, which is the leading quadrant, and is beginning to move down into the weakening quadrant. So one that we probably should be allocating away from. If we look here, that's the only one that was trading up above the in the upper levels. Most of those were trading down in the lower levels, which were the weakening or the lagging quadrants, and it suggested, and still does suggest, that the equities market is the one that we should be allocating to, and certainly not the others, which include gold. The ETF is GLD, our 20 plus year bonds, TLT is the code, VNQ, which is the REITs, the real estate tradable ETF in the US. The junk bonds here are in the lagging quadrant, and certainly none of them look strong at the moment, so certainly the focus at the moment should be on the US equities. And just looking at the 20-year plus US Treasury bond ETF, TLT is the code, and on the left hand side we have the Ichimoku chart trading down below the Ichimoku cloud, below each of the Ichimoku indicators, suggesting very strong negative bias in this market in all three time frames. Very large black body candle today. Sellers very strongly in control, so certainly allocating away from that. If we look at the relative performance to the SPY here, in terms of the bands, trading outside of the lower band for the past week or so, so very strongly underperforming the S&P